I think that when gold really moves up, 5,000 or more, 10,000, $20,000 an ounce, when you get that kind of a move, I think it's because the US dollar is really, in almost a free fall. I think the dollar is going to be losing ground, and that means prices are going to be going up. So it's not like gold's going to go to $10,000 or $20,000 an ounce, and your grocery bills aren't also going to go way up. They're not going to go up proportionate to that, but they're going to be much, much higher than they are now. I mean, and they're going to be going up, and it's not just food, it's going to be energy and pretty much everything that's going to be getting more expensive because we're just going to be having a run on the currency, run on the dollar. I think the dollar is going to lose its status as the reserve currency. In fact, I think if gold is anywhere near 10, 20,000, it means the dollar has lost that status.
Spot gold found temporary support at $2,832.56 on Friday, rebounding ahead of the weekly close and extending its recovery into Monday. By the start of the new week, gold dollar traded around $2,885, benefiting from broad U.S. dollar weakness. Financial markets opened positively, supported by macroeconomic data released earlier. At the same time, gold prices found additional strength from ongoing geopolitical concerns. On Monday, gold prices surged over 1% after hitting a three-week low in the previous session. The rally was fueled by a weaker dollar and increased safe haven demand, partly driven by uncertainty over U.S. President Donald Trump's tariff policies. Trump is expected to announce his decision on tariffs for Canadian and Mexican imports, with the potential implementation set for early Tuesday. While he had previously vowed to impose 25% tariffs, the decision had been delayed by a month, with the pause now set to expire. The U.S. dollar index dropped by over 1%, retreating from a two-week high in the prior session. A weaker dollar makes gold more attractive for investors holding other currencies, further supporting the metal's upward movement. Historically, gold performs well when the dollar weakens, and many investors are positioning themselves for this possibility. PeterSchiff, CEO of Euro-Pacific Asset Management, believes gold could rally much faster if the U.S. dollar experiences a significant decline. He notes that if gold is already approaching $3,000 per ounce in a strong dollar environment, its value could rise exponentially in a scenario where the dollar weakens further. He emphasizes that gold remains a hedge against inflation and economic instability, regardless of whether it eventually reaches $5,000 or $10,000 per ounce. As long as currency devaluation and loose central bank policies persist, gold's role as a reliable store of wealth remains unchanged. Make sure to tune in for our expert analysis. Don't miss out on future content, hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I think when they do that, I think gold's going to move up much faster. And I also think when they start to do that, that's when the US dollar starts to really decline on a relative basis related to the euro and the pound and the yen and all these other currencies that it's been strengthening against. And if we have $3,000 gold or close to it, in an environment where the US dollar index is strong, imagine what gold's going to be trading like when the US dollar index is weak, right? Because that's when gold really shines, is when it has a weak dollar. The fact that it's been able to shine with the headwind of a strong dollar just shows you how strong the underlying trend is for higher gold prices. I think what we're headed for is going to be worse than 2808. First of all, in other countries, like you mentioned, in Australia, in Canada, they're already seeing gold move to a much higher degree. Because we're way up in terms of those currencies over the past couple of years because those currencies have fallen as the price of gold has been rising. So, those countries haven't collapsed, right? The people are still surviving this, huge move up in the price of gold. But I think that when gold really moves up, 5,000 or more, 10,000, $20,000 an ounce, when you get that kind of a move, I think it's because the US dollar is really, in almost a free fall. I think the dollar is going to be losing ground, and that means prices are going to be going up. So it's not like gold's going to go to $10,000 or $20,000 an ounce, and your grocery bills aren't also going to go way up. They're not going to go up proportionate to that, but they're going to be much, much higher than they are now. And they're going to be going up, and it's not just food, it's going to be energy and pretty much everything that's going to be getting more expensive because we're just going to be having a run on the currency, run on the dollar. I think the dollar is going to lose its status as the reserve currency. In fact, I think if gold is anywhere near 10, 20,000, it means the dollar has lost that status. People are fleeing dollars and buying gold. And in that environment, we can't run these massive trade deficits that we just reported today. So consumer goods are going to get much more expensive in the United States, which means the standard of living comes down. Interest rates are going to be much higher. This whole credit bubble is going to implode. And so we're going to have to go through a protracted economic decline. Now, is it possible that, AI and robotics and all that might, help transform the economy in the future to make it a lot more productive? Sure. But there's a lot of stuff that could go wrong between now and then. The bull market is going to last as long as we have fiat currency, pretty much. I mean, look, when the Federal Reserve was established in 1913, gold was $20 an ounce. Now it's almost 3,000. So, I mean, this is a long trend. And it's not that gold has changed. The value of the paper money has changed. Because when we first established this country in 1789, we ratified the Constitution, and there was the Coinage Act of 1789 that defined a dollar. And gold was $20 an ounce in 1789. And so 120 years later, when we created the Federal Reserve, gold was still $20 an ounce. It hadn't changed. The dollar had the same value in terms of gold when we created the Federal Reserve. And so that shows you that gold prices don't have to go up. They can stay the same if we have sound money. But the Federal Reserve, of course, began to print too much money. And then in 1933, Roosevelt devalued that dollar, and the price of gold went from 20 to 35. And it kind of stayed fixed there, although it was artificially suppressed until late 1970. And then Nixon devalued the dollar a couple times. But when he got to about $42, he just said uncle and just defaulted. But now, the dollar has been completely detached from gold ever since 1971. And that's why the dollar's value has accelerated its decline.
Traders increasingly expect the Federal Reserve to resume interest rate cuts in June, with another reduction likely in September, following new economic data highlighting mounting inflation concerns and weakening consumer confidence. On Tuesday, market sentiment shifted after a widely watched survey showed consumer confidence plunged this month while inflation expectations surged. The Conference Board's latest report revealed that U.S. consumer confidence dropped at its sharpest pace in 3.5 years in February. The decline reflects growing anxiety among Americans over the economic impact of President Donald Trump's policies. Meanwhile, consumer inflation expectations climbed to 6%, the highest level since May 2023, signaling persistent price pressures that complicate the Federal Reserve's policy outlook. PeterSchiff notes that while rate cuts are on hold, they will likely resume as economic conditions deteriorate. He warns that inflation could exceed 10%, putting the central bank in a difficult position, forced to choose between supporting the economy and controlling rising prices. New data suggests tensions between the Federal Reserve's dual mandate of price stability and full employment. Inflation remained stubbornly high in January, while consumer spending slowed more than expected, further complicating the policy outlook. Despite the expectation of rate cuts in June and September, analysts caution that the situation is becoming increasingly complex. The Federal Reserve may face tough decisions in the coming weeks as it weighs the risks of cutting rates amid persistent inflationary pressures. Let's get back to the interview.
I wouldn't wait for that. It's going to be like waiting for Godot. So what you should do is just buy. This is a nice little pullback here. We got above 29.50 and now we're back below 28.50. So we've had about $100 pullback. That's about as much as you're going to get. That's how the bull market has been. You have to pay up. Otherwise, you're not going to buy it. But, silver is still very cheap. If you think I missed a boat on gold, I mean, you didn't miss it, but, you may want to buy silver. It's still below $32 an ounce. Silver is ridiculously cheap. So you could buy that right now and maybe buy gold later. And also the gold mining stocks, which you alluded to, I think that's where you should really be buying. I mean, because the gold mining stocks are not that much higher than they were when gold was 2,400. So, you could really just, take a gift horse there and just buy them now, before they eventually explode, which they will do. They never really turned them off. They slowed them down a bit, with quantitative tightening, but money supply expanded about 5% M2 last year. So they didn't turn off the printers. They just don't have them in overdrive like they have had, and they will. Look, initially, they used inflation to prop up the economy, to prop up the financial markets, to prop up the government. But when that inflation became so unbearable on Main Street, they finally had to do something about it, right? So, but when rates got up to about 5.25% and banks started to fail, that's when the Fed stopped hiking. And then when it became clear that the economy was, turning around, they started to cut. And they've paused the cuts because, inflation has really spiked back up. But I think that eventually they're going to resume the cuts because the economy is going to continue to weaken. But inflation is going to continue to strengthen. And so that is the dichotomy that the markets don't appreciate. But when the Fed is faced with that dilemma, it, I think, will err on the side of trying to stimulate the economy. And, they'll just allow inflation to get worse. Now, they're not going to say that. They're just going to, pretend that inflation is going to come down by itself or that they've already done enough and we just have to wait a little longer for inflation to work its way back down to 2%. But it's more likely to go above 10% than go back down to 2%. It's hard to say. You might have thought it was going to be these good earnings that were just released, but we got a bunch of earnings that came out and most of the stocks went down, even if they beat their earnings. But even the stocks that didn't beat, that missed, the earnings were still great compared to the prior year and relative to the stock prices. So there's just so much negativity in the sector. And I think it's just because the analysts that follow these stocks don't believe in gold. They expect the price to be much lower in the future than it is today. And so that clouds their judgment for what these companies are likely going to earn in the future, what they're worth now. And I think people are making money, or at least they were until the last couple of weeks, in tech stocks and other type of stocks that are a lot more exciting than gold stocks. Have certainly performed better over the last 5 or 10 years than gold stocks. And a lot of other people have been distracted by Bitcoin, which obviously has gone up a lot over the last 5 or 10 years. And I think that's stolen some of the retail thunder out of the price of gold, and probably the gold mining stocks. Ever since all these Bitcoin ETFs were launched a little over a year ago, I think a lot of stock market investors that may have bought mining stocks decided to buy crypto stocks or, Bitcoin ETFs. I think that's going to end up being a very bad decision for them. But that may be one of the reasons why these stocks are still so cheap and nobody is really paying attention to how good the fundamentals are.
With gold prices gaining momentum amid a weaker dollar and persistent economic uncertainty, investors closely watch upcoming policy decisions and market shifts. The anticipation of Federal Reserve rate cuts and rising inflation concerns has created a landscape where precious metals may continue to thrive as a hedge against volatility. As central banks navigate the balance between economic growth and inflation control, could gold be on the verge of a historic price surge, redefining its role in global financial stability? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.